Welcome to Marketscore training. I'm going to go through a fair amount of what Marketscore is and how it works before we get into the details of actually how you use it for trading. But for the most part, it should cover any questions you guys have, but I will be obviously allowing for questions toward the end. I'm just going to give a disclaimer. This is not financial advice. This information contained in or provided during the live stream is not intended to be used as a constitute for financial advice, investment advice, trading advice, or any other advice. The information provided during this trading is provided for education and informational purposes only. Any risks associated with the use of Marketscore indicator or data provided by Marketscore indicator are the responsibility of the user directly. Moving on. So we're going to go through an overview. I'm going to show you how Marketscore works, give you some basics of the fundamentals. A lot of people ask how it's actually structured and what it is and what the different parts mean. Give a sort of a quick understanding of reading Marketscore, and this will actually parallel with the charts, and I will show you what that means when we actually start going through the different charts. And this is the conversation that I was talking to you about before, where when you separate the Marketscore from the charts themselves, it's maybe a little harder to necessarily, I mean, there are ways to be able to see it, but it may not necessarily be completely applicable without the score and the count information. And then I'm going to show you some trading. Evidently, this is one of the things that was left over in my original template, so we're going to remove those. All right, so Marketscore is a holistic market indicator that is based on data that is from across the market. It uses many different tickers in order to be able to provide and pull that data together. It provides visibility on buying and selling pressures to help you make informed decisions on different possible movements in many tickers from across the market. Current functionality is optimized for ES, but it also works with NQ, YM, and RTY. I don't stream RTY. The only ones I stream are ES, NQ, and YM. But just to give you an idea, and this is more in relation to just sort of I give you guys a little bit of a history. Let's see if it actually shows me really quick. It will work with almost any ticker. And I'm just going to pull up for 731. This is actually NVIDIA. Hold on one second. Evidently, it's being a little difficult. Okay, so this is NVIDIA. Same kind of thing. Disregard the numbers. It's based on how the indicator operates. But you can see that the focus trade had 67 cents of heat for a $3.72 return possible for NVIDIA. But again, this is just one of many tickers. Right now, the only ones that I stream right now are futures. But this indicator will work with many tickers. And I hope to be able to bring as many of them as I can to the actual indicator that I roll, but they will have to come out incrementally just because there are optimizational things that have to happen. And just to give you a quick understanding of what that means, we're going to actually show you the 24th. Okay, so you can see here that on July 24th, there was, this is only showing focus trades, I apologize. There were only 2 trades in ES and in NQ. NQ is not fully optimized, it's partially optimized, but it is still optimized. But you can see with YM, they're all short trades, but it's getting in and out, getting in and out. Now, mind you, on this day, YM did a little bit different than the way ES. ES actually started out and was trying to move up while YM was moving down. So it did make it a little more complicated. RTY, Russell was the same thing. So Dow was trying to move down. So by the time that it actually started opening focus trades, it was all in short, or it was all, it had already moved all the way down and then basically was ranging in there, which is the reason why I was doing this. But if it was optimized, it would have different things that would be triggering how that's handled. But as you can see, there was only 1 trade on that day for both NQ and ES. So the optimization does make a difference. And over time, I will go through and optimize more and more of the tickers. But right now, the ES is the one that's fully optimized. And then NQ is partially optimized. And then Dow and Russell are pseudo optimized. I wouldn't call them optimized, but they have some optimization, but not to the degree that ES has. So how does Marketscore work? So Marketscore captures data across multiple tickers from the market, including the following. It captures directional information, velocity, quantitative data and derivative data, meaning that it actually goes through, captures different types of data and boils it down into in using an algorithm in order to extrapolate numbers that help it track the pressures in the different directions of what the market is doing. It uses sector data to help provide context of movement, because as you can imagine, the sector data, when one sector is moving up and one is moving down, that typically means it's a risk off, meaning that somebody's actually taking money out of one sector or potentially taking money out of one sector and moving it to another sector. Having the sector data in there does keep things from showing incorrect information or less than correct information. Calculates trending with extrapolation of the derivative data. So the derivative data is then run through an algorithm that then helps it actually capture how the market is moving and to what degree in order to be able to help represent that in the numbers. The algorithm executes multiple times a second in order to give the most update scoring. And I don't know if you guys watched it, but there are times when it's like 5 to 10 times in a single second it will actually iterate through. I don't know if the stream actually shows that because I only do 4 frames a second in order to minimize how much data is coming out of my house. But the score itself is updating very, very rapidly. High and low scores are provided separately to provide potential visibility into the market movement as the day progresses. So now we're going to go into Marketscore itself. So this is what Marketscore is. It's just this piece of it right here. The different parts of it are the upside score, the downside score, the number of highs for the upside score, the number of lows for the upside score, the number of highs for the downside score, the number of lows for the downside score. These are the last 10 calculations that are different, meaning if a new or 12, I'm sorry, if a new calculation comes in and it matches the current one at the number 1 position, it doesn't replace it. If it's slightly, even 100th of a point different, it will replace it. And then it will continue to move down. So this is not based on time. At some point, I may do that and make it based on time. But for the time being, it's just not really high on the list. And then these are the downside last 12 scores. They're underneath it on the chart itself. This is what it looks like on the chart pages. But on the market score, it's just this piece and the chart. The chart has the upside, which is the blue line, the downside, which is the red line, and then there is the delta. And the delta is the difference between the upside score and the downside score. And I mean, like on today, this was actually data from today. So at one point during the day, there was a 76-point delta. And the downside score was not negative, but at the maximum it was, so if the upside score was 71, the downside score was negative 22, the delta at one point was like 93. And it may have actually even broken 100 today. I'm not sure off the top of my head because this was actually done during the market, while the market was moving. So the indicator shows pressures in the market. Separate indicators for both upside and downside. Upside pressure shows pressure of buyers. Downside shows pressure of sellers. Now, this is important to keep in mind, is just because a seller stops selling does not make them a buyer. And just because a buyer stops buying does not make them a seller. And this is the reason why having 2 scores is imperative, because, and you can see it actually in this. So if everything was consistent, and if somebody stopped buying, they were selling, and if somebody stopped selling, they were buying, these would move out at the same pace. They would move away from each other at the same pace. You can see the sellers picked up right here when this is moving up, but the buyers were relatively consistent. They weren't going down. They were staying consistent. And the reason why it's important to be able to represent both of those is because there are times when both of them are moving up or both of them are moving down. And the other thing to keep in mind is that weakness in one, so you can see the weakness in the downside. Mind you, this today was definitely a more complicated day. Oh, I'm sorry, this isn't from today. This is actually from a different day. But weakness in one side does not automatically equate to strengthen the other. So you have to think of the number of high, the new high count, separate from the new low count. Weakness will tell you if it's potentially going to allow things to go against it, but won't necessarily tell you if it's going to go back in the direction when the other one is moving down. So if, let's say, the upside is starting to peter off a little bit, doesn't mean that it's all of a sudden going to immediately start going down just because there's a weakness in the upside. It's a little bit complicated, but over time you get used to it, and after you watch it, you'll understand it a little bit better. The separation of them allows for a full picture. It provides new highs for to capture intention. Now, this is tricky. Intention, and I use this word more as a reference rather than an actual English iteration of it, meaning it may not always show what the market is trying to do, but it shows what the pressures are showing that it's trying to do. And I'll get into that in a little bit. Okay, for a week representation, 0 to 5 new highs is weak. So this one with a 6 is not weak, but it is not strong. 6 to 15 counts as showing strength, meaning it's giving indications of potential strength, but it doesn't mean that it's strong. And then greater than 15 counts as strong. And the score is relative of the day, meaning that there are days when the scores don't get really high. And that just means that typically it means that there's not a lot of volume and it's just not necessarily moving as dramatically in order for buyers to be able to buy and things along those lines. All right, so moving into reading the market. So here is where, and this is what I was talking about earlier. So there are 3 different types of days. There are balanced days, and I'm going to go through the balanced days to give you an idea. The characteristics are the day often starts out mixed. So this is an example of a balanced day. So you can see the score is not really moving a whole lot. It's basically relatively flat. And you can see it goes down and then it comes back up and basically gets right to where the open was. And then as the day progresses, the upside definitely, you can see the upside definitely is stronger, but then it comes back down and it closes, I won't say at the open, but it's sticking around. And keep in mind, part of that has to do with this yellow line, and I'll get into that when we move on a little bit. But this is a balanced day, and the way that let's go back and actually look and see what the other items are. Okay, the other thing, so it starts out mixed. One side gains strength after a couple of hours, maybe not to reach the level of above 15 counts. So let's go back to this day. So after a couple of hours, so we've been open for a couple of hours right about here, you can see the downside only has 13 highs and the upside only has 9 highs. So neither one of them are strong. It's not really showing specific indications of either way. And as I said, it ends up basically meandering around and kind of sticking around that. It does at the end of the day get a sell-off, but that was more of an afterthought than really of the intention of the day. The day ends with both sides showing roughly the same low and high counts. And as you can see, the number of high counts are very similar. The number of low counts, not quite exactly similar, but they're still double digits is usually, I would say, consistent for the lows, because the low isn't as much of an indicator as the highs, the number of highs. And then the last one, it typically has focus trades on both sides. And if you go into here, you see a long focus trade, you see a short focus trade. I'm going to go really quickly through all of the balanced days. So that's about one balanced day. This is another one. Similar kinds of things, double digits in the downside. We start off pretty flat. We do move into an upside, but then, of course, it comes back down, and then we end up just basically meandering around, and there we go. There's that close again, which is that yellow line. So then, and we have long, short, long, short, long for the focus trades. Oh, I should switch these so you guys can actually see them a little bit more succinctly. The focus trades are just the silver ones. So you can see long, short, long, short, long. So it's going back and forth. Same thing with this day. Long, long. Oh, this one does only have trades in one. I think I said typically in the other one. But this one, the scores are very similar, and the lows on for both the upside and the downside are both the same. So and the upside basically moves around the same point. It does show a little bit more strength to the upside, and it ends at that point. And that's the other thing is that on a balanced day, what the score is showing will be what is represented in the chart. And you'll see what I mean when we get into the days that are different than balanced days. So when it starts out, it basically is moving along and the score is showing upside movement and it is moving up, and that's exactly what's happening. So next day, same kind of thing. It starts off pretty modest. This day is a little different in the fact that it has a relative strength for the downside. And the reason why it's a balanced day is because it doesn't necessarily go against what this is saying. So the downside is saying that it's winning. I guess this could potentially be a trend day, but it doesn't have a few of the characteristics, and I'll get back to that. But it does only have one focus trade, which is another indication that it could be both a trend or a balanced day. As you can see, the downside score is winning and the market is moving down. So very clear indications, everything's working just like it should. Another balanced day, kind of start off pretty modest. You can see the scores are very similar. We don't end up with a lot of high scores or low scores. And this is what I was talking about earlier. The range on this day is very, very different than the range on this day. This one gets up to 80 points, this one is only at 30. Even the high of the opposing one is only 54. So it is always going to be relative to the day, and it depends on what is actually happening. There are various factors that play a part in it, but you get the point. Another range day, very similar scores. Another range day goes up, goes down, goes up, goes down, goes up, but we're not really making significant changes. The scores are relatively close. This one could be considered a trend day, but I put it in here because the scores are similar, not necessarily too far apart, because we do have double digits, basically strength in both, but it doesn't necessarily, it's doing exactly what it would be doing, which again, could be a trend or a balance, but you get the point. This one, again, we're back and forth, back and forth, back and forth. The scores are relatively close. The counts are very, very similar in numbers. And then this is the last balance day. Again, and just moving along, again, that close is kind of a magnet. We have trades on both sides. Again, all the indications of a balance day. So now we're going to move into the next type of day, which is a trend day. One side score is significantly higher than the other scores. Often strength is established by 10 a.m. Eastern. Now, this is the important factor for trend days, and I'll explain this in just a minute. The market score chart shows continued pressure to one side for the day, and even through retractions and retracements, and then often only one focus trade for the day when optimized. And I put that in there because there may be items that are not optimized, and you'll get the point. So we're going to go here. This one, you can see the downside score just kills it all day long. Now, here's what's interesting. By 10 o'clock a.m., so 30 minutes into the market, there are 18 new highs for the downside, 6 new highs for the upside, while you have 18 new lows for the upside and 3 new lows for the downside. So potentially, and this isn't every day, but potentially by 10 a.m. in the day, so 30 minutes in the market, you can tell that the downside is going to be a strong day. And as you can see, it progresses and adds new highs to the downside as the day goes. It is showing significant pressure to the downside. And keep in mind, the market is moving down, the downside is on top and basically killing it all day. Everything's in alignment. That is a relatively is a trend day. Same thing with this day. Even though it does move back and forth, the downside, and this one's a little different because it starts off pretty modest, but again, by 10:03, here we are again. Look at that, 16 new highs for the downside, but only 1 new high for the upside. By 10:03 a.m., you potentially knew or had a good indication that the market was going to move down. Keep in mind, this does have 2 trades, but that short trade showed up first. That short focus trade showed up first, which usually is the one that is correct. And on the day like this, where you see that at 10:03, and then it continues, now we're at 24 new highs for the downside. And now we're at 33 new highs for the downside. So all of these things add up, and we end up with 44 new highs for the downside. So by 10:03, you have a very good information that the downside is the part of strength on a trend day. So then again, here we are, same kind of thing. It starts off pretty modest, not really seeing anything significant, but then right here, 10:21. We now have 14. This isn't necessarily the complete indication because remember, below 15 is not necessarily strong, but it does show strength. But the key is that the upside only has 2 new highs. So the downside at this point is still doing very well. And again, remember how on balance days, we stick around the close of the previous day. And this is not sticking around the close. We actually go and we break so this is the previous day. We go and break that low. So again, the downside is on top the entire day. So we're going to go to the next one. Same kind of thing. We start off this day, and this is the interesting part, even with the downside on top. And this is how interesting it is. And every time I watch Marketscore operate, it's very interesting to me how this works. But even with the downside score on top, look at how many new highs there are for the upside versus the downside. So even by 9:52, it's not saying that it's going to go, it's not saying that it's going to win or do better, but it's very interesting that 22 minutes into the day, it's already showing a tendency to want to move higher, which is, again, very interesting how Marketscore is able to sort of help provide that kind of insight this early in the day. But again, it pulls out there. You do get 1 more new high for the downside. There's a 5 that it shows up. And we don't get a huge number of highs for the upside, but it does start to make new highs. I guess by the end of the day you do with 36 new highs. But the scores themselves are not really anything substantial. 56 is not huge big, but it's not horrible either. But it ranges up all day. And again, the market score trending matches the chart almost identically. Again, another trend day. This one starts out over, with the upside on top. Again, early in the market, you have a number of highs for the upside is 10, number of highs for the downside is 3. So even again, we're 16 minutes into market and we're showing a leaning toward the upside, and it does it basically pulls it out and continues. And then at the end of the day, we still only have 18 new highs for the upside. So even though it was trending, wasn't necessarily a strong trend, and we ended up only having a 31-point range. So still categorized as a trend day. And then another one upside. So we know at this point right here, or we're seeing at this point right here, 12 new highs for the upside, 3 new highs for the downside, and this is 21 minutes into market, giving indications that things are going to be moving toward the upside. It does take a while to really get significant confirmation where now we have 25, but it is showing a significant amount of movement. The one caveat on this day, which makes it a little bit more complicated, is we are getting short, long, and it has to do with how it's actually reading the TPO data. And I'll get into the TPO data in a little bit, just so you guys have an understanding of what that is. And that's the trend days. So now we're going to move on to the last type of day, which is called a heavy pressure day. Now, these days have a very specific information about them because they provide insight into what is potentially, or at least so I've seen in all the days that I've tested, a play that is available in Globex. And it has to do with very specific information about how the market is progressing and then what happens toward the end of the day and what that implies in the overnight session. So I'm just going to go through this really quickly. It presents similar to a balanced day. The day is often start out mixed. So we're going to go look at a heavy pressure day. You can see this is not necessarily a great example of that. This is. So you can see it basically is starting out looking like it's not really going to really show anything. It's showing that it's basically going to be even. I mean, you're not really seeing, so you have 5 highs for the upside, 6 highs for the downside. So it's not really showing strength in one direction, and that's by 10 a.m. So you're not really seeing anything significant in one direction or the other. But one side gains strength over a couple of hours that may not reach strong level on high count, but it continues to 25. So it may not reach that in the first couple of hours, but it will continue to get above 25. The high count on the opposite side often does not increase past the initial 90 minutes. And we're just going to start with this one. So you can see the opposing side. So we have 8 new highs for the upside at this point in the day. And for the rest of the day, it never gets another new high. So it's not increasing on the opposing side. Often there is a spike toward the low count side at some point in the day, and it stays below this spiked movement. Now, this is where it gets interesting. So on this day, the trend clearly is to the downside, which I mean, you're not going to question that. But toward the end of the day, you see this spike up or this movement up. Technically, it's not really a spike, but it is a very significant movement up where the low down here is the 47, and we move up all the way to the 80. So that's 33 points. So that's a fairly significant move off of the low of where it gets to. And here's where it gets interesting. On this day, and I called this out in my Twitter, and I have a few places that I put it, but on this day, wherever it ends the day, typically based on the ones that I have in here, and I haven't gone and done this with all my data, but what happens is in the overnight, this will actually run down and take that low. And here are the indications. You have significant pressure to the downside the whole, or more or less the whole day, and then it does the opposite right at a certain point. Now, I'm going to go through these really quick just to show you exactly what that looks like. So this is yesterday actually, and I did this play, and it actually came down and broke that 44.5, which I think 44.75 was the low, and it broke the 44.5. So I actually put my entry at, I think I got in at 70 because it ended up moving around during the settle session. I got in around 71, and then I put my stop or my exit down here, and it came down and and hit my exit. It did meander a lot in here, but I think I put my stop like 5 points above my entry, and it never actually hit it. So now we're going to go to the next day. This is a very similar situation. Again, pretty modest at the beginning, but all of a sudden we're getting very high counts on the upside. And we end the day with 33 new highs for the upside. It doesn't look like anything, but what happens is you can see it's going through. We get up to here, and all of a sudden it drops. Now, this one was a little frustrating because right as soon as the market closed, the settle session ran up and took the high. So in this case, it doesn't work because, of course, the settle session still has to complete. And so it didn't actually play out for that overnight trade because of that. The settle session taking that high negated it, but it still did do the same type of thing. Again, same kind of, this day, same thing. We move down. You can see the downside is basically strong all day. We come down, we hit this low, we move back up, we get up into here. In the overnight, it took this low. Same kind of thing. And again, look at the number of new highs for the downside. 40 new highs for the downside, while there's only 8 new highs for the upside. Okay, this day, same kind of thing. It doesn't look like it's the same. The key, there's a couple of different factors. In one, we are moving up, and you can see we get up to a high, and this is one where it actually spikes. It spikes down, and then it kind of meanders along. And I did this trade as well on Sunday. So this is a Friday. I did this trade on a Sunday night Globex session, and again, I don't remember exactly where it opened, but it was right near 5,500, or maybe, no, I think I got in at 54.96, and it went up and took that high. So it took the 29, I think, is this, because the high of this is 28.25. So it got to the, I know at least it got to the 28.5 because it took me, or it exited my trade. But I got in at 96. So I rode this thing for, what is that, 30 plus points in the overnight. So then the next one, same kind of thing. You can see the downside is doing very well all day. And then right here at the bottom of the day, it spikes up. And again, this one does come down and take low. By the way, before I forget, I'm going to tell you guys this right now, just because I know that the session is closing here in a minute. The same thing happened today. So I'm not telling you to take this trade, but I can tell you that all the times that I've watched it, the trade work is that if you get into the Globex session at open, mind you might have to wait a minute to let it settle. But I typically try to just jump in with a very small number of contracts and give myself between 5 and 10 points of heat, or allow 5 and 10 points of heat, and then just put my stop just below the exit, or just below the low. Today is another day where that would happen. This is a heavy pressure day. The downside was kicking butt all day long, and all of a sudden something moved it up, and it never got back down there to fix that low. And this very often means that it will come down in the Globex session and fix that low. So I'm just letting you know that now before we get too far. So this again is another heavy pressure day. This is another heavy pressure day. Same kind of thing. I did take this trade as well. You can see the upside score is kicking butt all day long, and right as we get close to the end of the session, it basically plummets off the end of the earth. And then we end up closing, what is that, 45 points below where we were at just a few minutes earlier. So again, same kind of thing. That's the heavy pressure day. And then here's the last one. Similar process. So it comes up, you can see it doesn't quite take that high. It comes up, but it doesn't quite take that high. And this, when you look this up, you will see it did come down and take this low. So it actually came down, what is that, 25 points for this trade. And the downside score was, I mean, again, you kind of knew early on that things were going to go down, and they did. But it's interesting to me that even while this thing was moving up, that downside score just never relents. It's always on top, even during the move up. And this is the hard thing. Somebody actually said, can you fix Marketscore so that it will actually be representative of what's happening in the market? And I had to sort of tell them, Marketscore is a leading indicator, or tries to be a leading indicator. And sometimes the ability to be able to lead doesn't always mean what's going to happen right now or in the next 5 minutes. But on this day, what Marketscore is telling you by showing you this is that it is trying to release the downside pressure, which does end up happening in the Globex session. So even though during this move up, it does sort of relent a little and come down, but it doesn't give it up to the point where the upside score becomes on top. But in the Globex session is where this pressure, this downside pressure, is released. And that's kind of important to be able to keep in mind, is that it may not be representative of what is exactly happening right now, but in order to be a leading indicator, it can't always show you the exact data in front of you. It may be something that is happening And in this case, like I said, in the Globex. So we've gone through all of those days. So we're going to go back to this. Okay. So we're going to talk about trading with Marketscore. So now we're going to go to and talk about TPO. So on the chart, there are these green boxes. They are the value area. And the value area, I'm not going to go into market profile with a heavy degree, but market profile is a type of trading that was phrased by a gentleman by the name of Jim Dalton. He has created something called market profile. Another name for it is TPO. And what it means is where the market was moving for 70% of the time during this day. And then on top of that, there's the high and low of the day, which is what that is. There's the previous open, which is what this light blue line is. There is the previous close, which is the yellow line. And then there is the POC. POC means point of control, which is where it spent the most time while this day was happening. So wherever that line is where the market spent the most time. Now, the reason why I bring this up is because these lines are significant. They have relevance in how the market behaves. And I'm just going to use this chart as an example. So you can see the market opens, and then you kind of, these arrows are a little bit in the way, but you can see these are bouncing effectively off of, technically, they're bouncing off of this settle. You should always use the most recent day and the most recent day as the main reference, and then work your way backward. So in this case, it's bouncing off of this close of the previous day. And you can see that it comes back up and sort of rides it, and then it comes back up and sort of rides it again. Then it shoots up and it gets up to the POC of the previous day. Then it comes down, and you can see that it bounced off of the value area low right here. Then it bounces up and then comes down and bounces off the value area low again. The whole reason why I have this on here is to give you visibility into why the market is moving the way it's moving. You're not always going to have all of your levels, but by being able to see it, and keep in mind as the chart is progressing, this will all be stretched out, and the majority of it is happening over here. The action is happening over here. And the reason for that is so that you can actually base the movement based on what is happening with the bouncing of the value areas, or the interaction with the value areas. So that covers all of those. The blue bar, this blue bar right here that goes all the way across, those are called single prints. Now, on the day previous to this, and I'm going to show you the previous day, it moved very quickly. Actually, what was that level? What was the level that it was? Duplicate. So we're going to go back to here. The level that it was so 55.10 or 55.05 to 55, let's say 08. So when it was moving through right here, you can see it came down and it moved very quickly through that area. And what that represents is an auction that has not, well, often what it means, I can't say that it's every time, but often what it means is an auction that has not completed, meaning that the people who were trying to buy didn't get to buy enough, or the people who were trying to sell didn't get to sell enough. One or the other doesn't necessarily really matter, but that means that it moves through that area very quickly, which is what is represented by this. And what that means is, and again, so this is the next day, you can see the market comes down and literally barely bottom ticks it, hits it, goes through it just a little bit, and then rejects and immediately comes right back up. Again, these are things that the price action is interacting with, and reasons why you need to be paying attention to, not more than just the highs and the lows of the previous day. There are other things at play here, and you can see it in action right there, right in front of your eyes. Okay, the trading model and the way that the trades are done. So the long trades and the short trades are separate, meaning it can never be in a long, two longs at the same time, and it can never be in two shorts at the same time. But it can give you longs and shorts at the same time. And the reason for that is because, for the same reason why we have upside pressure and downside pressure separate, is because you need to be able to see that represented, because there are times when it is helpful for you to be able to understand. Like this day, you can see it's basically trying really, really hard for the entire day to get back to that close of the previous day. So it moves up and then it comes right back and gets to the close. And then it kind of meanders around the close, and then it goes back down, and then it tries really hard to come right back up to that close. This very often acts as a magnet, and it will try its very best. And that's the reason why there are long and short focus trades. But it will try very hard to try and pull the price back to it. There are days when that doesn't apply, and that just means that the pressures are higher than the magnetism of that, but you get the point. Okay, so the way that I trade with Marketscore, there are 3 rules that I have for ES and 3 rules that I have for NQ. Again, it may depend on the day. The velocity and the movement of the market is going to have an effect. But rule number 1 is 2 to 5 points of profit, you're trailing it 2 to 5 points with your stop in order to be, meaning that you don't want it to go too far away. 3 to 5 points based on price action is where you're putting your stop. So you may move your stop up as it's going. It depends. And the reason for this is because you can't always be certain that the first focus trade is not, or maybe the second focus trade is not going to come back at you. And then the stop trails as the price moves. Trailing stops is not what I'm referring to here. I would mean that you would be moving it because, of course, as the day is progressing, it may be more volatile at the beginning or more volatile at the end. And so you may have to gauge that. But at the same time, it is effectively a trailing stop. And then risk management, until it shows movement, don't give it too much freedom. You need it to go in your direction. You don't just jump in there and say, I'm going to give it 20 points of heat or possible heat and have it go against you that quick. You need to be able to sort of keep that in line. And then the way I am trading right now is I am using 1 to 3 micros, and that is intentional. So when I originally started with Marketscore, I was using much bigger contracts. And what ended up happening is I had people that were trying to mimic what I was doing, and they were blowing accounts. And so I had somebody basically ask me, how do you even do this if you're using small numbers? And so I said, you know what, I'm going to show that it's possible. And so all of the posting, and I don't know if you guys have seen it, but in the Facebook post that I do, I am typically, the trades that I take are 2 micros. Those are the only, when I get into a trade, it's with 2 micros and that's it. And usually I'm looking for between 5 and 10 points. I don't always get that, but that's usually what I'm going for. So this is the trading rules in the ES. Same thing in the NQ. Everything's pretty similar, except for it's 20 to 35 points of profit and 10 to 15 points based on the price action for the stop. Now, again, NQ is a little bit more difficult to do that with, just because, of course, it at times moves very quickly, and you may not necessarily be able to make that happen. So we're going to go through the trade table. There are 3 different types of regular trades. There's the black ones, that's the ones with just the black. There's the yellow ones, and then there's the red ones. The black ones are regular trades. They're just based off of the trading model. The yellow ones are caution trades. And the reason why the yellow ones show up that way is when the trade in the opposite direction above it has a certain number, and I'll be honest with you, I don't remember off the top of my head, but the algo determines what that number is. It will make it yellow so that you don't end up just jumping into that trade. And mind you, in this case, it obviously wouldn't be a focus trade anyway, but it's, the idea is to just let you know that it may not necessarily play out, because the one previous to it in the opposite direction is doing very well. The red is very similar, except it has more criteria to determine whether or not it puts it as red. And in this case, it's based off of the similar criteria. The heat allowed for regular trades, which are the black, the yellow, and the red, it starts off with 5 points. So as soon as the trade opens, it gives it 5 points. As the trade progresses, it allows for more heat if the market data is giving it more possibility. This right here is from the NQ, but you can see that there are some trades here that allow 52 points of heat. And that's because at this point in the day, it was going in the correct direction. And so it was giving it more freedom of heat. And basically, once it adds on to that possible heat allowed, it doesn't remove it, and it just lets it go. The other thing to keep in mind is I use pessimistic entries, meaning these entries right here that it shows you are the worst possible entries for that candle. And the reason why I do that is because my goal is for you to be able to enter the trade at whatever level it's showing or better. And very often in the NQ, you can do better. I would say 95% of the time, you should be able to do about 5 points better than what this trade is showing. The goal for me is that people will actually be able to get in. And so I use pessimistic entries for that candle, because these are 1 minute candles, and it uses the worst possible level of that candle in order to indicate the entry so that you can actually hit that level. It does cause for a little bit more noise. There are times when it would be better if I didn't do that. But in the end, the goal for me is for you guys to be able to actually use the data and make it work for you. So the focus trades are the ones with the silver background, the ones with the silver background. The reason for getting into them is based off of the market profile. They are very likely to be able to be taken multiple times. The heat allowed on these is fixed. It is not variable, so it does not give more possibilities of heat, even if it's going in the right direction. It allows, in the ES, it's 10 points. In the NQ and the YM, it's 30 points. And the RTY, I think, is 10 points as well. I think it actually mimics the ES. And it exits when more than these number of points is hit, period. And once it exits, it doesn't re-enter that trade. So I'm going to go through some days and show you trading, how these days would be traded. So these are only showing the focus trades. So this first trade, as you can see right here, you get in, the entry is at 51.68. You basically take about 3.75 points of heat, and it results in 3 points. And I mean, it actually goes up more than that, but I'm not going to go into great detail. It gives you 5.75, and it has an entry of 20.5, but the entry that I'm using is 18.5 because you would very easily be able to get in at the level that it's saying. You can see that next candle actually is coming down. So there's no way you couldn't get in at 18. In fact, you could get a better entry even below that, but that's not the point. My goal is, again, to try and help you guys figure out how to actually play it. But it runs up all the way to the 25 from the 18 where you're in. So, and again, remember what I said about the first trade, the first trade of a focus trade is you need to be careful about not letting it go too far against you. So in this case, it goes up and then it comes back down, and it would stop you out as long as you were trailing it to a degree. You could take it again and run it back up to that same level because it gets back up to the 25 and take it for another 2 to 3 points. But then when it comes down over here, it actually exits on this way down. So you wouldn't necessarily take that trade a third time. Now, this short shows up while it is moving down. And again, this is the close of the previous day. So this would be an indication of waiting. It would be an indication of not necessarily getting into that trade because you're not. And this is the other thing. You don't want to jump from one side to the other. And I'm sure you guys know that as traders. I'm sure you've run into that. When you're jumping from one side to the other, it will cause frustration and difficulty. So you're waiting for another long or for it to show continuation and move below. And as you can see, you only get 3.75 points of profit on that short. So it wasn't long-lived anyway. Going back to here, you do not enter that second trade. The third, fourth, and fifth trades, I intentionally left them undone because this trade right here, it's moving down, and it basically, even if you got into it, it basically meanders right here for a long time. It does eventually go, and it does eventually go for 11.5 points, but it's right at the close. I would say if it's basically riding that close, you don't want to get into that trade. And it basically sits there and rides it the whole time. It does eventually come back over here, and there's a short that opens up at a very similar time as when this one is getting out. But at the same time, so you can see this one closes at 26 and this one opens at 25. So they're very similar in time. But again, same kind of thing. It's opening right there on the close. I wouldn't say that is an ideal trade. So on this day, I would say you get 3 points. And even if you took that trade and let's say you broke even or maybe lost a point, you'd call that day a wash. The other thing I wanted to point out is the days that I'm going to show you are not what I would call optimal days. An optimal day would be a day like, if I was really trying to show it, I would choose the day like this. That would be an optimal day. You'd know you'd get into the trade, you take 4.5 points of heat, and you'd be able to ride it for 53 points. And it pretty much, from the point you get in, it basically never gets back to this level. You're in at 24, right just a little bit below that line, and you can see it never gets back to that level for the entire day. If I was trying to just cherry pick fantastic days, this would be a day that I would pick. But I'm intentionally choosing difficult days so that you guys can better understand how to play them. So now we're going to go to the next day. Next day, we start off, the next day is the 26th. So we have an entry at the open of 54.90. So we're going to look at this. So this entry is at 54.90. So it gets in and it gets into a long. It basically immediately goes against you. So you take a 3-point hit. The next trade opens up and the entry is 86.25. Now this trade comes in and it actually looks pretty good. You get in at 86.25. I'm gonna say that you get in exactly there. I do think you could get better, but it's irrelevant. This thing rides all the way up to the 5,500. Now, I think that between the 86.25 and the 5,500, this says 15 points max. I only put 10, so a 10-point return. So then we're going to pick the next trade because that one closes at 33. So basically when that thing comes back down, it closes. So then this trade, this one opens up way over here at 54.90. I have you entering below the open at 87.25 because this is, so if you look, it's kind of hard to see, but you can see the next candle is actually at 87, 86 actually is the next candle below it. And then once you get in, you could potentially write it up to only here. This one does take 6.75 points of heat, but that's only with an entry of 54.90. At 54.87, I think 54.87.5. Yeah, you'd take less heat. You would take, I think, 4.75 points of heat. But let's say you did get stopped out. When it gets back, and this is the thing about focus trades, when it gets back to your level, it is acceptable as long as it is showing directional convergence, meaning that it's actually looking like it's doing what you think it should be doing. And in this case, even though this is kind of meandering, right over here, you start to see this thing, the upside is moving back up. And that, even if you waited until you got over here, that would be an indication of potentially of re-entering that trade at or better than that level. So the 90, so you'd enter back in over here as it's coming back up. And then, of course, that trade goes for 38 and a quarter points. And I think I put it for 17 and a half, and I'll show you why. Because as this is progressing, you can see that it gets up here to the 15 and then retraces all the way back to the 5. So that's a 10-point retrace, which based on my trade, the rules, you couldn't follow, which is why I have you getting out. So it'd be like the 4 or the 5, I think, is where I actually have you getting out. So when it comes back, it takes you out. So I'm even allowing for you to give it a little bit more possibility of maybe even 5 points of 5 or almost even 10 points of room to move. But this thing comes a solid 10 points back, and that's not really an easy thing to stick around for. So that is that day. So now we're going to move over to the NQ. So the NQ, I'm going to choose the same days. And the range on this day is 254 points. So we're going to go to the NQ. So this is day 1. So the first trade that shows up, basically you get stopped. And look, it opens and closes in the same minute. So the open is at 10, the close is at 10:01. But let's just say, for the sake of argument, you jump in, the next candle opens actually even below or really close to the 20,000. So you should be able to get in closer to the 20,000. But for the sake of argument, I'm just saying you jump in at, and I think I have you jumping in at 12, just to give it a little bit more. So it is a little bit above. I have you jumping in up here, and it goes against you. Now, on the NQ, I said you have a 10-point regardless. Let's say you have a 15-point stop. It doesn't matter. But it closes 1 minute. That trade's a loss. Next trade opens up. Next trade opens up. It opens up at 2017. I think I have you getting it exactly at that level. Yep, because that trade is more complicated or does not have enough room for you to really get in at too far below it. It runs all the way up to the 45, looks like. So it runs for 29 points. I have you getting 18. So I'm giving you basically an 11-point stop. So you get 18 points out of that. It comes back down. Now, again, this is the same thing we talked about with the ES. This short, because you were just in a long, this short is not necessarily a trade that you should be taking immediately. And again, it only shows 7.5 points of profit. It ends up going against it, so it ends up not being a great trade. The next trade, though, is an entry at 20,015. Now, this one just goes and goes for days. So you can see it gets in right here. So I have you getting in. It's moving pretty quickly, so I have you getting in exactly at the entry. So 2015, it basically goes up unhindered all the way until it gets to the 70. Now, it shows 77 points possible. I have you getting 47 points. So it's, again, the goal is for me to be realistic with what you're actually getting. You're getting in at 17. You're writing this thing all the way up. So I have you basically putting your stop, I think, in here, and it comes back and stops you out. And so you're getting 47 points out of that trade. Now, the hard part is that there are additional trades, but as you can see, that it again keeps coming back to that level. And so then all the next two are shorts. This one has 47 points. So I'm not saying that you shouldn't take it or you can't take it. But at the same time, given the fact that we were just in a long, not necessarily the best look. So I would ignore at the very least, then, well, I guess they're all the rest of the focus trades are shorts. So I would ignore all the rest. And as it turns out, they're all bad trades anyway. And it's because it's going against that thing. So then we're going to move on to the next day for the NQ. So this one, the 26th, we have a 178-point range. Trade 1 opens at 19,162. This one goes against it immediately. Again, you're getting in and it basically comes right back. I would say, I think I have you getting in exactly at the level, yes. And you take 10 points of heat, you get a 10-point failed trade. So you're now 10-point loss. Next trade is still a long. So when this trade shows up and you're getting into it at, I have it 109 because of course there is a lot of movement on this one. So there's actually, you can see the candle next to it, this candle over here. There's a lot, you could actually get in all the way down at the 100, but I have you getting in at the whatever it was that I said, the 109, because again, I'm trying to give you realistic expectations. But this thing runs all the way up to the 90. So you're in at 109 and you're running this all the way up to the 90. Could get a lot more than 54 points, but I think I was just, again, trying to be realistic. I have it going up to the 60, so maybe I have you keeping the stop at the 60 or the 65, and then it goes up and comes and stops you out. So that's the 54 points. Now, the rest of the trades, again, they are longs, and this one is playable. I mean, I'm not going to go into the significant detail, but that is a playable trade. Again, if you followed it, even if you got break even on that one, this one almost certainly would be a loss if you were getting in exactly at that entry. I do think that, I mean, it basically comes down right after or right as the candle is opening. So I think you could find a better entry, which would ultimately give you this trade earlier. But again, and I'm pretty sure that you guys can see how this one would play out relatively well. So I'm not going to go into detail on exactly how that one plays, but you guys get the idea. But this trade goes for a possibility of 151 points. It's kind of a no-brainer. That one wouldn't require a whole lot of finesse to be able to ride that thing out to the end. So that covers the majority of what I have. So now I guess what I want to ask you is, first of all, are there any questions? Do you guys have any questions for me? And you can ask in chat or in voice, either way.
Hey, Stacy, can you go back to the upside downside score real quick?
Which one? Like which day?
Just anywhere. I just want to make sure I understand. So looking down here at 39.63, so the new highs of that are, so if it went from 39.63 to 40, that would create a new high.
Correct. Well, no, hold on. If it broke this high, so this was the last time it made a new high, so it would have to go to 79.
And is that showing a timestamp?
Yes, that is the time that it made that new high. I mean, I added the timestamp because I think it's nice to have, but the truth is I don't use it barely at all. I mean, it's I use it more as a reference more than I really use it as actual data.
So I understand now. So it has to break that 78.
It has to break this to be considered a new high.
Okay, very good.
And then the same thing for the low. It has to break whatever that previous low is in order for it to be considered a new low.
Thank you for that clarification.
No worries. Any other questions? By the way, when I was going through the days and showing you the different types of days, when we were discussing the balance days versus the trend days versus the heavy pressure days, I actually qualified or quantified every single day we've had since July 1st. All of those days fit into one of those three categories. So every single day is one of these three types. And the idea was to sort of help you understand that it's how you play on those days that is the factor. On a balanced day, you're going to get trades from both sides, and you have to be careful not to just get sucked into one side or the other. It's important to be able to sort of see it holistically. And in this case, that long kills it. Unfortunately, this short kills it, but it's the short before it actually gets to the point where it actually gets into a focus trade. And just so you guys know, the reason why I leave all of this, I could make it so that it only does this, where it just shows the focus trades. I could make it so that every day just showed you the focus trades. The problem is that there are valid trades in the rest of it. And I can tell you with my trade plan, on this day, I would have likely gotten into this long before this popped up. So this popped up way over here. I probably would have gotten into that long because I know that this level was significant. I probably would have gotten into that long somewhere in the 50 range, which keep in mind, is where these ones are. That long right there is probably right in that, I guess technically it was, so I was already in the 10 o'clock, so I guess maybe not. So I guess it was in vicinity, but I would have probably gotten into that long a little bit early just because my trade plan would have said anything above the 50 is potentially a long. And I would probably front run that. But the reason why I leave all of this other data here is it's important for traders to be able to see levels and also to be able to get reference information. And that means, like, when you see a short exiting, potentially that's a time to get into a long or to add to a long. So let's just say in this instance, this trade opens right here, right in that area. The very next short, you can see it closes just above that. That potentially is a reference for a level of adding on. Clearly, that would have to be in your trade plan, but the idea is that is the reason. The other reason why I leave them is because it provides visibility into how things are progressing for that day. Are there any other questions?
I do also have one more.
Sure.
No one else does. Can we talk about the heat and the heat before peak and some of those numbers over there? I assume heat refers to how many points of loss we're talking about.
So the heat is the total amount of heat it takes before it exits.
And what is heat to you?
Heat
that
is any movement in the opposite direction from your entry. So from this entry, the price moved 7.5 points off of that toward the upside.
So that's trailing as the play works out.
Correct.
Okay.
Now, heat before peak is a little different. And the reason why I have heat before peak is this tells you how much heat it took before it reached the max level. This is another thing about the focus trades. That's a no-brainer. Who wouldn't be willing to take half a point of heat for a potential at 57 points?
But that's not showing at the time of the trade, right?
It is showing. Oh, no. It won't tell you. As much as I would wish I had a crystal ball that would tell you how much heat you're going to take. This progresses and shows you as the trade is progressing. But, I mean, you would have only seen it ever get to negative 0.5. That's it. And it would never have progressed any lower than that.
So when that focus trade came up, it said, hey, look for an entry around 47 or 54.75.25.
That's the entry. And so it shows the entry, and then the rest of these three are zeros.
Okay.
And then as the trade progresses, so this, I will tell you, this amount of heat was never achieved until after it had way over here. So this trade opens way over here. That amount of heat was never it did never receive that amount of heat until way over here. So that it entered at 10:49. It only exited, which is when it got that amount of heat, at 14:54. So at 2:54 was when it actually got to 10 points of heat.
Sure.
Before that, it was nowhere near that.
It was upside.
Well, it was only half a point of heat for that entire run, all the way to the 57.75.
Okay. Possible. Now, how do you personally manage your trails? How do you know where your stop limit is, or are you trailing this manually? How do we know how much room to give?
I'll tell you this. So I typically am looking for levels, and I'm just going to give you an idea on this day. If you had entered this trade, and this is the reason why I have so much on. I know this chart is busy, and I hope you guys understand. I don't do it simply because I wanted to see it busy. But you can see when you enter this trade right here, this thing runs up. You can see that POC. This thing runs up, taps the POC, and then all of a sudden there's a mechanical buyer probably somewhere that goes, time to sell. And it goes and it sells it down into here, and then the buyers finally catch on and pick it up. And then it comes back up, and then look, it hits the POC again, comes back down. And then eventually the buyers say, screw this, we're moving through it, and then they push right through it. But you can see that it's interacting with that. So for my trading, when I get into a trade, I have a specific level in mind that I'm looking for. I very rarely, I'm not saying I don't ever. Today was a little bit frustrating because I only had the low end of my trade plan only went to 82, but this thing was dropping like a rock. And so I finally had to jump in a little bit lower, and I ended up running it all the way down because I knew 75 would be a reference level. And so I put my exit at the 76, and I got it. But when I get into a trade, I'm looking for a specific exit. Now, for this amount of retrace, if it is bouncing off of the 5505 and it comes all the way down to the 5480, that's probably 5483, that's 23 points, 22 points of heat that you would, or not heat, but retrace that you would be taking. I wouldn't sit through all of that. I would say even if I said, I know this thing is going to go all the way up to the value area high, and I had my exit up there, I would have my stop probably somewhere within, on the ES, I would have my stop somewhere within 5 to 10 points usually at most. Now, there are times when I give it more room. Today was definitely a day where I was very specific about my entries. In fact, usually the way that I trade is I will mark it in when it hits my level. I won't have a standing order sitting at a specific spot. I will mark it in order to be able to trade that. But what happened today was it was jumping like 5 to 7 points minimum. And my ATM has a 3-point stop. So if I jump in, I have to immediately grab my stop and move it out of the way, or I'm getting nailed.
Mm-hmm.
So what I ended up doing today is I saw where the Marketscore focus trade hit at the 88, and I saw that it was basically bouncing up to the 97, 95. And so I said, I'm going to put my entry at 94 and then let it play out. And as soon as it hit, I grabbed my stop and moved it above the 5,400. I put it at the 5,401, and so 7 points of heat, or 7 points possible of heat. It ended up only going not even 3 points of heat, and then it went my direction. But today was a day when I knew that I wasn't going to mark it in because it was so volatile.
Okay.
But
this was informative. Thank you for putting this together for us.
You're very welcome. And are there any other questions you guys have? All right.
All righty.
Well, then I'm going to call it. I want to remind you guys, I'm just going to say this one last time. I'm going to be sending out a Twitter post about this. Today is definitely, I'm not saying it's all, I can't promise you it will work, but based on the data, this should or is very likely to take that low. And I just want you guys to be able to jump into that trade if you want to.
Will that be on Sunday night? It's Friday.
Oh, yes, Friday. It would be Sunday night. Yes.
And you show me the low where you're referring to again here. So you think it'll sweep the bottom low?
I think that it'll take this bottom low. I'm not 100% certain, and I would definitely encourage you to figure out how you want to trade it. But sure. I usually get in with two micros, and I put my stop about 5 to 10 points up above it, and I let it play out.
Okay, and that's on the ES, I assume. Yeah. Also, the next question is,
I do micros, so MES, but yes.
Oh, MES, but on this chart, like, how do I know what chart this is for? I know when we're on the YouTube stream, we can see it there, but I mean, is it listed on here somewhere? Am I missing it?
It's up a little bit higher.
Okay.
Here. You can see where it says ES right here.
Oh, there you go. Yep, I see it now. Okay.
I don't, because I'm the one. I mean, you guys don't see that stuff because there's no reason to show it to you because it's always based on whatever the stream is.
Sure.
When the indicator's done and ready to run, it will show you the full. It will show you all of the stuff on the page that you need.
Okay. Very good. Well, I appreciate it. Have a great weekend.
All right.